Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over memes. So, yeah, I just wanted to go over a couple of Roaring Kitty posts, kind of dive into some of the meaning behind them, and then get into some charts as well as options data. And I have to say, before I get into this video, Merry Christmas, Happy Holidays. Whether you celebrate or not, it's a great day to be here, and especially because we got a new tweet from Roaring Kitty. So, yeah, let's dive into it. All right, and so this post came out from Roaring Kitty, just this image of a present on today, December 25th. The time here is probably Central or Midwest time, so I guess that would be at 10 a.m. Eastern. Maybe there's some significance there. I'm not really sure. But just looking at this, it's kind of ambiguous. What is this? It is a gift box. All right, so we're all asking what's in the box. Greg bets that there's a Roaring Kitty in that box, but let's dive into it and try to figure that out. And so I'm just going to look at some stuff here that's on Twitter or on X, and then get into the charts. And so this other post that stands out, I'm sure it stands out to you guys as well, was Roaring Kitty's earlier post from December 5th. This came out at 1:45 p.m. Eastern, and I believe that there is some significance with that time that GameStop tends to bounce following that. I'm not really sure, but that is kind of what I have heard. But let's just look at the symbolism for this tweet that he has here. So it is the Time Person of the Year cover for Time Magazine from 2006, but it's been doctored a little bit. And so a couple things about it. One, there's no text down here, which says who the person of the year was for 2006. And also the time changed. Roaring Kitty edited this to say 1 minute and 9 seconds out of 4 minutes and 20 seconds. And so I was thinking, just being an idiot, that maybe this is January 9th at 4:20, we get high, who knows? And so maybe GameStop is going to see some pretty big moves in the start of the new year. But, let's take a step back before diving into the time there, and we look at the actual cover from that year. So as you can see up here, December 25th, of 2006, so 18 years ago today, this cover came out, which I guess was released on January 1st of 2007. And so the person of the year was you. And I think that a lot of people have come to interpret this in very interesting ways, and I think that there's a lot of credibility to that. And so here it says, yes, you. You control the information age. Welcome to your world. And here we can see that the time is 0 minutes for 20 minutes and 6 seconds, or 2006, the year of 2006. The person of the year was you. So, I think that's pretty interesting. But then thinking about this time here, my idea about January 9th, not such a great idea in my view, because somebody else, looks like Vet Goku, posted this interpreting this information here, which I just think is super cool. I feel like it's just a really great DD that he did. And so Vet Goku says he told us to look at the soundtrack since May. And so that is from this video game Fury. I have to say I have not played that one, but you can check out this tweet here, and I might actually play the clip in the video just so we can kind of get an idea, but he's just talking about the soundtrack for the game Fury. It's such a tough game. It's like you're always at a final boss fight, but it just keeps pushing you forward. And so that's kind of, like what retail's been dealing with. So many nefarious actors holding us back, holding us down. And, so there's a lot in this soundtrack that just keeps pushing us forward. And so if we do look at, the time cover that Roaring Kitty released, it said, 1 minute, 9 seconds, 4 minutes, 20 seconds. And so if we look at the Fury soundtrack, we can see that 1 minute, 9 seconds, this song here, that's that long, is called Time to Wake Up. And then there's another song from the soundtrack that's 4 minutes and 20 seconds long. And so that song is called A Monster. So it's time to wake up a monster. And so, I think that could be GameStop, but I think it could also be a number of, very stocks that are very retail heavy, have a lot of interest in them. And so one of those is actually Unity Software, which I'm sure that you guys are familiar with because it has been moving a lot over the past few months. And so this was a retweet from the Bronx Viking. I had initially retweeted this, but then I realized maybe I shouldn't because this is not for Unity Software, the software company. This is Unity as in a cryptocurrency that is on the Solana blockchain. And so I'm not familiar with that at all. I'm not trying to promote that or anything. So I did not want to retweet that. But, I just found it really interesting that the box is it. There's nothing in the box. It's just Unity Software, and you can see the logo of the company there. And so what I posted was this. It's you. Buckle up, because the ticker symbol for Unity Software is you. And if we come back to it, it's you. And so I think that's what Roaring Kitty has really been trying to say with these tweets is, that there's a monster and that it is Unity Software. But that is not to say that I think he's bearish on GameStop or that he's not still on GameStop or that he's not still in GameStop. This was his last YOLO update from 6 months ago. I believe it was 194 days ago when he posted this on June 13th. He still has 9,001,000 shares as far as, the last time he updated this. So I imagine that he's still holding those shares. And I think that we could be seeing a pretty nice rally with not only GameStop, also Unity Software, and I also think other, retail-friendly stocks or meme stocks like AMC, stuff like that. But I just think that, AMC has pulled back a lot because of, the recent dilution. I think that they're above support, and I think they could be going higher. But I think that, GameStop and Unity are kind of the tickers of interest right here. So those are the ones that I wanted to go over. And before I flip over the charts, almost forgot to do this. I had been covering Unity Software for about 6 months. I believe the first video that I put out was in June, and this came about because of during a live stream, Ticker Request Live. I stream every Sunday at 9 p.m. Eastern, take requests, go over the charts. Somebody requested Unity Software, and I was compelled to make a video about it. And, I've just followed up with that and it's picked up more traction. And I unfortunately haven't really participated in Unity Software. I just was a little late to it or, just watching it, observing it. Very interesting stuff. But yeah, I've been covering it for a while. And, to me, it's kind of like my baby because I was covering it before it was memed and stuff like that. So yeah, personally, I have a little bit of FOMO with it, but at the same time, I want to get it in the dip buy zone. I don't want to get it in the rip your face off rally zone. And I think that we might be in the dip buy zone right now. So I'm just going to flip over to the charts to kind of go over my analysis of Unity Software. As you can see here, this is ticker symbol U, which closed on, Tuesday, December 24th. It was a half-day trading, closed at $22.80, being up a little under 2% on the day. And so my analysis really came back to, looking like Unity was trading in this downtrending channel going back to 2002, but at the same time, this channel being kind of approximate. We have this shading here that's based on, I believe, one standard deviation of the price action. It might be two, I forget. But, it's just based on whatever the price is. It does adjust as time moves on. And then I have this kind of, approximate parallel channel there. Have broken above it a couple times, broken below it over here. But generally, we have seen this downtrend. And so I really started making videos about it over here, so this is in August 6th, when it was testing the bottom there. And so I started putting out videos around where the cursor is here in June, suggesting that, we might be finding a bottom, whether that's the parallel channel, which is, I believe, based on that anchor point. You can see there, or, based on this shaded channel. And so I didn't really know exactly where the bottom would be, but from this, I did draw this inverse head and shoulders pattern. And from that, we did get a very nice measured move up to here, trading around the midpoint of that shaded region. And then we did pull back here. I was trading some calls, but not too aggressively. I'm pretty new to swinging calls, swinging options, so I go fairly light and fairly long dated contracts. I'll go over some that stand out to me with Unity as well as GameStop in a minute. But here, what we saw was a retrace to that purple line, so the neckline of that inverse head and shoulders. And then also from this Fibonacci retracement, that was a retracement to the golden pocket. So that is a retracement to the 618, but then giving a little bit of wiggle room coming down to the 65% retracement. So you can see that little pocket there coinciding beautifully with that purple downtrend. And so that was a great dip buying opportunity before we got this big move to the upside. And so now it's like, when's the next good dip buying opportunity? And so I have been eyeing this because, over here we pulled down to effectively the 618 or 65%, however you want to think about that. But let's just say the 618. And then looking over at the retracement here, going from the low that was hit on November 15th up to the high that was hit on December 6th, which was also, like the day after Roaring Kitty was posting about Time magazine cover of you. And so that's when we hit the top here. It looks like it was around $28.67. And so I just did another Fibonacci retracement there with these levels here. Got the 382, the 50% retracement, and then the 618, which is at a price of $21.67. And so what was the low that we hit on December 20th? That was $21.69, so 2 cents above that 618 retracement, also having 69 cents in there. It's a fun number. We all love it. And so, yeah, I feel like it's quite possible that Unity software is finding a bottom here before the next leg up, and that we could be seeing some nice price action in the coming weeks, maybe leading up to January 9th, or maybe moving beyond that, or maybe just into the end of the year. But there is also, another level here to be cautious of, and that I have actually been restraining myself from jumping on this, because not only do I see the 786 down here at 1975, that does also look like it is the midpoint for that shaded channel, and it's also right around $20 a share. So that's kind of, like a psychological level, $120 bill. And so I've been kind of waiting to see, maybe this is a bear flag and it breaks lower, but it is quite possible that, it's finding or found a bottom there and it's going to start moving higher. And so there are a couple things that we could do to get an idea of where it could be going. And so, I have to note that I am doing this on the linear y-axis. I've seen from Colin Gladman, as well as I believe the Bronx Viking, they do stuff with the log y-axis. So I think you'd get some different results if you did it that way. But I'm just kind of doing this, ballpark, just getting an idea of where this could be going. But, I definitely recommend following them both on X, checking out any videos that they put out, because, I learned so much from them. And so I think it's really great to follow them, right from the source. But so I'm just going to do a Fibonacci extension going from the low that was over here up to that high of 28.67, and then down to the low that we recently saw. And so from that, if I take a step back, we can see that the 100% extension for that, which is effectively, just the measurement from here to here. And so you just take that move it from that low, and that lines up perfectly. So it's the same, amount of price action, dollar amount to the upside. So that's how you get that. And so that is at a price of right around $33, which is beyond $30, which, let's see, what was the high here? Did I say 28.67? $30 is a strike that's of interest. I'll go over that in a minute as far as some contracts go. But moving beyond 33, because I had kind of viewed $30 as being a nice price target, getting back up to, the shaded channel here, getting to the top of that, but we have broken above it in the past, so maybe we go a little bit higher. And let's say maybe we do go a little bit higher, beyond 30, maybe beyond 33. The 1618 is here at $40 a share. And actually what I find to be pretty compelling is this purple line here that is at right around $45 a share. It looks like I got the line drawn at 43.65, and it looks like, let's see, what was the high here? 43.54 on December 27th of 2023, and we've got this nice little maybe inverse left shoulder there. And maybe right now what we're forming is a giant inverse head that could potentially be getting up to right around $45 a share, or maybe, 43, 43.65. And if we do get up to there, maybe we form an inverse right shoulder and then get, a measured move from that. And I believe that this is what that measurement is. That could be bringing price up to around $75 a share. Here it looks like this measurement is going to 73.45. And what I can do with that, I'm actually just going to drag this down over here to the lows, and we can see that the midpoint of that measurement lines up very nicely with that purple line. So that does look like it was the measurement. And so, yeah, I think that we could see Unity Software heading up to beyond $30 a share. I think we could see it going beyond 33 and 34, and potentially up to around 43 to $45 a share before maybe a pullback to, let's say, around $25 a share, around current price. And that would be forming the right shoulder before this next big move up to maybe $70 to $75 a share. So, that seems like a pretty big monster. It seems like we have woken this monster up, and there's a lot of upside for it. So yeah, I just wanted to dive into some of the options data, and then I'll come back and look at the GameStop chart and go over that so you guys can get an idea what I'm thinking about that one. But all of this stuff, with Roaring Kitty tweeting, and just looking at the charts, I think they're set up for some really nice moves. And so, yeah, I'm just going to come back over to the web browser so we can look up some contracts in unusual whales. And so these are two that I've been covering in the weekly options video that I put out on Saturdays. I go over a number of contracts that I'm interested in. And I personally, since I'm not that familiar with swinging options contracts, I found that if I get stuff that's dated soon with an expiration date, I tend to lose on them. So I like to go months out into the future, which are probably not the most exciting contracts, but I feel like they're a nice way to swing and take advantage of the price action that's going on. And so one of the contracts that I had been looking at was the Unity Software $30 call that expires in June of 2025. So it's the monthly contract expiring on the 20th. And so I'm really just going to be looking at contracts with that expiration date, just because it's, more than 6 months from now. So we've got some wiggle room. I think that's pretty safe. And so, that's what I want to be looking at. Otherwise, I might panic and sell too early, or not, sell at a loss, stuff like that. So I think that this one's appealing. But the reason why I chose the $30 strike is because that was the highest strike at the time. And if we actually look at the options table, I'm just going to go back over here to the chart, looking at the options, looking at calls, and then I'm going to pull up the June 20th expiration. The highest contract is actually, the highest strike is actually $42 a share. So that is actually a pretty appealing strike considering looking at the chart and looking at this potential inverse head and shoulders pattern that we haven't even, finished creating the head yet. But this all just lines up to me. That price could be going to around $45 a share. So let's also look at the $42 strike for June 20th. And so I'm just going to do this from the contract lookup. I'm going to type in U here to look up the highest volume contracts. But the reason why I'm actually going to filter by premium rather than highest volume is because you can think of volume, or at least this is how I interpret it, as being like, let's say you have a herd of sheep and they're all going towards some contract. You don't want to be following the herd of sheep. That's a lot of volume. What you want to be following is the wolf or the sheepdog. And so those wolves, those sheepdog, they're not going to be trading in large amounts of smaller contract premium. They're going to be trading in smaller amounts of higher premium contracts. So it's better to look at premium. That's where the big money is versus the volume. And also these are going to be maybe shorter dated, and just the premium traded on them, the low high average that's right here. That's probably going to be on the lower price range, so it's going to be a little bit cheaper. Retail gets into those more. But if we look at the premium, they're probably going to be a little more expensive, going from $1, $2 per contract up to here to like $4 to $5 per contract. And so each contract represents 100 shares. So you would multiply this number by 100. And so that's going to be about $450 per one of these contracts. And this is the $25 call for September of next year, September 19th, monthly expiration for the third quarter of next year, I guess that would be. And yep, so there are all these other contracts. That one had, about $1 million traded on it on Tuesday, and that was a half day. So that's a good amount of money. But yeah, let's see. We can also sort these by change in open interest to get an idea of these contracts have been, increasing in their open interest. The top two are calls, so that is bullish, whereas the next two are puts, that's bearish. But we also see that, there hasn't been much volume traded on these. It's actually been zero for these. But this was, from the previous day, these contracts going up. Anyways, I'm probably getting into the weeds with this. But yeah, I just wanted to point that out, kind of a good way to filter contracts. But for me, what I am interested, I'm just going to type it in here again, just in case. So I got U for Unity Software, and I am interested in the June 20th expiration. Want to look at calls, and the strike that I am interested in, as I had mentioned, is the $42 strike. So I'm actually going to add that to the list over here, but I also might add the $40 strike just because it's, divisible by 10. Maybe it's got a little bit more action on it. So let's look into that one. And so, but let's first look at the $30 strike that, I was initially showing that expires in June. And so, this is just showing one day over here. And as far as this net premium that's behind me, that's just one day. But what we can see from that, just from that one day, the yellow is the stock price that was going up on, let's see, that was the 24th. So on Tuesday, yellow stock price going up. And with that, the net call premium in green going up. So that's good. Whereas the net put premium in red here has been going down, and it's actually negative. So that means that puts have been getting sold into this strength, whereas calls have been getting bought. So in my view, that strikes me as being bullish. And this is for all Unity software contracts. This is not just for the contract I'm looking at over here, which, unfortunately doesn't have too much, volume traded on it, partly because it's a shorter day, also because it's months from expiration. It's not the most sexy contract. But for, somebody like me who's still fairly new to trading contracts, it's a little bit safer of a bet. There's more time between now and expiration, so can play with it. And with less risk, although options contracts are very risky. And so I'm just going to fix that so I can scroll down here. And we can see, total premium. We did see some $1 million days in the past on December 5th. That's when Roaring Kitty put out that tweet. We saw a total premium of over $1 million traded, which represented about, 1,900 contracts, 1,953 contracts traded on that day. That is the volume. And from that, we saw an increase of open interest into the next day by about almost 400 contracts, 390. And so we see the open interest go from 7,419 up to 7,809. And so that's good. This $1 million was net buying, accumulating these contracts. So that is bullish. And then we look at this other $1 million day for the total premium traded for these contracts. We had the open interest on that day over 8,000 contracts, 1,600 traded on that day, which led to an increase by about 465 contracts, with the open interest the following day on the 10th of December being 8,639. And so from that, we can actually see that the open interest has continued to go up, with on the 24th at the open, there was an open interest of 9,357 contracts. Didn't see much premium traded on that day. So, I would not be surprised if it stayed right around, over 9,000 contracts, because it was only a volume of 17 of these contracts traded on that day. So it can't really change more than that. But anyways, overall, the general trend from, the 5th back here with this $1 million total premium day, the number of contracts that are open has gone up from 7,419 to over 9,300. So that's really good. And so this does seem like, a pretty safe bet contract, especially with the closing price of $22.80. It's out of the money, but it's not too far from being in the money at $30. And it had recently been right around there at $28.67, I believe, was the high. So this seems like a pretty interesting contract to trade, but the premium for it is around, $250. And it closed just below 270. It looks like the average fill over here was $2.67, which translates to $267 per contract. That represents 100 shares, or exposure to 100 shares. So yeah, I find that to be pretty interesting. And then looking at the $40 call that also expires June 20th, we actually don't see, anything for the contract, so maybe this is not such an interesting or exciting contract to be looking at. It actually looks like it's fairly new. As I had mentioned, this was not previously listed. It looks like it was listed on the 6th, the day after Roaring Kitty tweeted. And so I wonder if, is this causation or correlation, whatever it is, this looks pretty good. It looks like this followed that. There haven't been any $1 million days on this. But if we do look at the cost of the premium for this contract, we don't have any data from one day. If I adjust this to show 2 days, it looks like there was one contract that was either it looks like it was sold because it went down over here. And so this was on the 23rd, and that average fill was at $1.50, as you can see over here, that one contract. And so $1.50, it's cheaper than $2.50 or so, which is, what it's going for, over for this $30 call. And $40 strike, while that's considerably out of the money, if we look over at the chart, it does match up with the thesis that it could be going up to 43.65. So that seems like, not to diamond hand, not to hold for expiration, but maybe just to swing for some premium. So this contract does look pretty interesting to me. But, again, it's like, $1.50 per contract. And so if we look at the $42 strike that also expires in June, also didn't have anything traded on the 24th, but we had a little bit more traded on the 23rd. It looks like there were 9 contracts traded on the 23rd versus only 1 for the $40 strike. So this is actually a little bit more appealing, a little bit more exciting of a contract. And then if I scroll down here, we can see, while there haven't been, $1 million days, this contract was also introduced following the Roaring Kitty tweet on December 6th, as he tweeted that time cover on the 5th. And so this followed that. And, we've seen $100,000 in net in total premium traded on the day versus the $40 strike. The highest was 13,000. So over here, 150,000, 185,000. And what did we see with these, large dollar amount days? We saw 0 contracts open on the first day that it was listed. Then it went up to 95, pretty good. Then it went up to 429, and it's actually increased a little bit to about 457 open contracts. And this is actually even more reasonable per contract, trading around, $1.20 per contract versus, the $1.50 over here for the $40 strike, or $30 strike is, around $2.50. So, while this seems like the $30 strike seems much more feasible for, us to be closing on this date above 30. If this is just to be swung, if these are just to be swung for premium to take some gains, I think that a cheaper entry is the $40 call or the $42 call with 6 months between now and expiration. And, I think that, rather than risking $250 for one of these contracts for the $30 strike, one could be risking, about $125. But then that would be with the $42 strike. So, I just think that these contracts are pretty interesting. And, I have to say that I have been covering the $30 strike with the weekly options videos, but I'm going to have to start looking at maybe not the 40 just because it doesn't seem that exciting, but the 42 that does match the thesis over here. So I have to say I'm really, really excited about that. But I also have to say too, though, if one is not interested in contracts a little, because they are pretty risky, with the current stock price being around $23, going up to around $45, that's effectively a 2x right there. And so, I think that could be a nice way to make some money on this with not as much risk because, maybe this doesn't do what we expect and time eats away the theta for those contracts and maybe they end up going to be worthless, whereas the shares will not go to be worthless. And, I think that looking at this chart here, there is the possibility that this could be pulling back to around $20 a share. So if that happens, maybe that would be a good time to pick up some contracts or pick up some shares. But with what we've seen and this coming back to the 618 and respecting it, I feel like the bottom's in for Unity Software. I think we're going to be going past 28.67. I think that we could easily be getting up to $30 a share. And I think that 33 or 40 is definitely feasible for price to be getting up to those levels, or 45. But I don't know that we'd be closing above 45 in June. So that's where that gets a little bit riskier. But closing above 30, I think that's feasible. I think the chart looks really good, and I think that it's so nice, and it's so, for me, validating to see others talking about these things as I'm learning, how to identify these bottoms and do these retracements, extensions, whatnot. And so, yeah, I just think this looks incredible. I have to say that I'm really excited about it, but I know that a lot of you are also really excited about GameStop, so I wanted to go over that. The GameStop chart here briefly, because I think anything associated with Roaring Kitty, whether he's talking specifically about Unity Software or if he's talking about GameStop as well as that being the monster that we have woken up, I think that the GameStop chart looks great, but we are below some resistance, and that resistance, from what I can see, is this orange uptrend. I've gone over it in previous videos, but that is effectively connecting the low from, I believe, April 23rd, which was a price of $10.05. Connecting that with the low from August 5th, and that was kind of a special day when the markets gapped down. That was a great dip buying opportunity. There was a big spike in the VIX then. We also just recently saw a spike in the VIX. So that was a great dip buying opportunity on the 8th. I think we might be seeing that now. But anyways, from that uptrend, that orange line there, it does look like we have been battling with it for quite some time. We were trading above it when we hit the high on November 26th of 32.12. We did get a little bit of a pullback and we have been consolidating below that level. And so what I think would be really good for GameStop would be for us to see a close above 32.12, effectively getting confirmation above that level that there is still a lot of strength in this. And so, whether we close above that on Thursday, I think if we close above 32.12, especially being above 32, I think that would be great for us to see that on Friday, closing the week, that being options expiration. I think that would be really good. And that would also be getting above this orange uptrend. And if we do start to see some price movement above that uptrend and start to show some strength above 32.12, really, I think like the next level is going to be right around $50 a share. I've got this blue dashed line here, which is actually a gap at 48.75. That was the close from May 14th. And so I think that we could be making our way up to around $45 to $50 a share. But I also think it's quite possible that we blow past that, as over here, we had a pretty big move to the upside with the market hours high of 64.83. But I believe the pre-market price high was $80.01. So, I think that we could be going up to potentially 65.80 or potentially getting into the triple digits, getting to around $100 a share because, we would be starting off this move to the upside with a much higher floor. If I do remove all of these drawings, we can see that the low over here was 995. Versus, the low following this pullback was 1770. So I think overall the GameStop chart looks phenomenal. And I think that we're probably going to be seeing a very nice rally. And I think more than likely getting up to $50 a share and beyond. And if we do go up to 100, I think it's quite possible we see a pullback like we saw over here. But maybe at this level, the blue dashed line here, the gap at 48.75, right around 50, maybe that could be acting as support following a pullback, following the next big move. And that would then have these candles over here, the wicks up here, acting as support. And so I think that is quite possible. I think that the chart just looks great. I think that the community is well aligned. I think that Roaring Kitty has got our backs. So yeah, I'm excited about this. And so I just wanted to go over some unusual whales options data on GameStop. And so one of these contracts I have been covering in the weekly options video, and this is the $80 call that expires in June of this coming year of 2025. That's the monthly options expiration, which is June 20th. And so this, I have to say, I do have two of these contracts, which I plan on swinging. I'm not diamond handing them because, I'm still getting used to contracts, but there is a lot of, flexibility with these because the expiration date is not a week away or a month away. In case these things take longer than we expect, I think that a June expiration is a pretty safe bet. And so I'm just going to leave that actually on the 2-day there because we don't have any data from the 24th. But what we can see from the 1-day data over here is this actually doesn't look so good. It looks kind of bearish because we see, the stock price in yellow being kind of flat there right around zero. And we also closed, below 32. We want to be seeing closes above that. We closed on Tuesday at 31.14. But with that being said, we see the put premium, the net put premium going up. That's the red line here. And you see that put volume right here increasing. So that's actually bearish. There are a lot of whether it's firms, institutes, or individuals betting against GameStop right now, as the put premium's going up. The call premium looks like it was going down. But this is also, considering something like GameStop, it's not millions of dollars. This is getting up to, let's see, the net put premium is 700, almost $80,000, whereas the net call premium is negative 600, about $50,000. So that does seem to be a little bearish, in all honesty. Take it with a grain of salt. But, I think that generally the chart's looking good. Maybe there's a pullback. Maybe that's just dip buying opportunities. So I'm actually going to extend this to the 7 days so we can see this a little bit more. And yeah, I mean, we see the stock price, going up here, kind of pulling back and then going higher. And while we have seen, the call premium going down from the 24th, and that actually being negative, overall, we see pretty big spikes over the past 7 trading days. Call premium going up a lot, $5 million. So, that's looking pretty good. Over here, this is millions of dollars. We do see a pretty big dip to the downside over here. Net call premium looks like it was negative $6 million. So maybe this was just kind of a swing going up about $6 million, down about $6 million. So yeah, maybe take that with a grain of salt. And then switching over here to look at the 30-day just to get, a really much bigger picture. We do see, of course, price has net been going up over the past month. And I feel like what really stands out to me, there has been some spikes in the net put premium, the red over here. But they've been kind of muted relative to the call premium spikes. And while there have been some dips in the net call premium, they are not as large, or they don't stand out to me as being as large as the calls to the upside, the net call premium going up. So, while this does not look as, I feel like as bullish as Unity Software, it could look better, but I think overall the chart looks really good. So I think that, this is one to consider. And I'm actually, I got 30 days over here. Since there wasn't anything or not that much over the past couple days for this contract, I'm going to switch this over to 30 days. And so we can see that there have been some spikes in this contract with volume spikes over there in the past. And so I'm just going to scroll down here so we can look at some of the larger total premium days. And we can see actually for this contract, it doesn't look like there were any that were in the millions of dollars in total premium, but there was this $105,000 total premium day that was on December 3rd. And it looks like that actually corresponded with selling of about 250 of these contracts. So it was around 500 of these contracts, and then it dipped down to about 242. So that's actually, kind of bearish in all honesty. But, that doesn't mean that this is necessarily bad. It just doesn't look as good as Unity. But this is also, not necessarily the most sexy call. And I should note that this is the $80 strike. I don't know if I mentioned that. And so why did I pick $80? Really because, what I was talking about over here, the pre-market high was $80 and I believe 1 cent. And so maybe we could be going up there. And again, this is to swing, not to diamond hand to expiration. But, I can look up some other contracts, just type in GME here, and we can sort them, not by volume because we don't want to be following the herds of sheep. We want to be following the sheepdog one with a lot of premium. And so we do have some $1 million days here from the 24th, which was a half a day trading. But we actually don't know if this was net buying of calls or puts or net selling of calls or puts. And actually, the most volume traded on Tuesday was this $125 put. Actually, Richard Newton talked about this in his video that came out today, so I recommend checking that out if you have not already. But this is actually, maybe he wasn't talking about this one because this is the elite. This is for 2026, not 2025. But with 2025, for January, we do see 125 that call. And so, I'm curious if these, there's millions of dollars going into these were net buying or selling, if they were net bullish or bearish. So we'll have to wait until the pre-market to find out about those. But looking at this one, this is the $125 call that expires in January, this coming January, less than a month from now. And we can see that, over $1 million traded on Tuesday. But what we can see between Monday and Tuesday, there was an increase in open interest of almost 14,000 contracts. Currently an open interest of 130,000 contracts. So that's a lot of contracts, a lot of money betting, on upside volatility. And I think Richard was talking about how that's potentially, a hedge. So maybe that's not retail loading into those. I feel like it is because, it's very out of the money. And, I think that retail tends to get into that because, the premiums on these contracts, it's just fairly cheap. This being, about the low being about 35 cents, the high being about 61 cents. So, for one contract, it costs between $35 to $61. And so that seems maybe a little bit more manageable than, the ones that get into like the hundreds of dollars, stuff like that. So kind of, pricey there. But yeah, so these are just sorted by premium. I can also sort these by change in open interest. And so, yeah, we've got these two between Monday and Tuesday. The open interest increased both of these calls, both of them expiring in this upcoming January of 2025, one being January 3rd expiration, that's a $60 call, and this other one being the January 17th call with $125. Both of them have over 12,000 increase between Monday and Tuesday in those contracts with an open interest here, $60. This one, in all honesty, seems like a safer bet in my opinion. It is like a 2x from current price to get up to there. But if there's a spike in volatility to the upside, I think that this premium could be going up. Looks like it's, 16 cents to 37 cents to get these contracts based on how they were traded on Tuesday. So, it's not risking that much, per one contract, $16 to $37. But, these could be very well be closing out of the money, going to zero. So very risky because of that shorter time horizon. And so that's kind of why, I'm interested in this contract, the $80 call that expires in June. Just a little bit safer bet there. But from this table, looking at from the highest change in open interest, let's see, are there any that expire in June or later? So I'm just going to scroll down to look at those. We may not find any. But yeah, it does look like there are some that expire in February, so maybe those are of interest, just being a little bit safer. But yeah, sorted by change in open interest. Now I'm just going to do by change in premium and see maybe there are some with the June expiration. There is one with an April expiration, but those are like, $700 to $800 plus per contract. So those are pretty expensive. That's a $30 strike. But maybe there's some others. June, I like that date. And that's a $125 call. So maybe I want to look into that a little bit more because I just don't want to be doing anything that expires too soon. I just think it's a little risky. And for me personally, at least, risking $700 to $800 plus on a contract, a little risky because it could be going to zero. And so this one here, yep, again, $600 plus per contract. This is April expiration with a $35 strike. Here's a $30 strike for June 20th. $900, $900 plus. So that's pretty expensive. And so, yep, 31. This is again, $800 plus per contract. And yep, here's 25. This is gonna be over $1,000 per contract. It's a $25 call strike that expires in June. And yeah, so I think I'm just gonna look at the 125 just to see what's going on with this. If we look at the let's see, I'm just going to lock that so we can scroll. Total premium traded, it looks like pretty much every single day, it's hundreds of thousands of dollars. I don't see any $1 million days though, but just, a lot of money going into this. And we see, let's see, going back to December 5th when Roaring Kitty put out that tweet, it was around 11,000 contracts. And now we're up to almost 16,000 contracts that are open. So yeah, I mean, it's quite possible this could be, going a lot higher, as there's just been, kind of like relentless buying of these very, very out of the money contracts. But if we get a spike in volatility, the price goes a lot higher. As I had said, I think GameStop could be getting into, the triple digits. Let's see, I've got to maybe switch this over to the weekly for us to see triple digits on the chart. And the all-time high, it looks like, was $120.75. And that does match with a $125 strike. So maybe we see that in 2025, but also maybe we don't. We might be getting ahead of ourselves looking at 120, 125, because first we have to, be closing above, what was the price that I said? $32.12 marked over here. We need to be showing some strength closing above that we're not putting in a top here, that this is in fact a bull flag, that we've consolidated below this uptrending resistance, and that we will be breaking out to reclaim 50, to reclaim 65, to reclaim 80, 100, 120, and beyond. I do think that is quite possible. And yeah, I mean, I just wanted to put this video together because I was really excited about, Roaring Kitty's tweet today. And so I was just inspired, wanted to put this out. You guys will have to let me know what you think in the comments down below. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thank you so much for watching. I hope you all had a very Merry Christmas with your family and friends. I hope you're having a great holiday season if you don't celebrate Christmas. And I look forward to seeing the price action tomorrow, and seeing where these options and these stocks take us into the new year. Take care, you guys. Cheers.